Okay, we are still revising on trying to go through those questions that you had in financial accounting, the multiple choice questions. So last time we had to do some questions from one, somewhere from one up to, should be 5 or 6, if I haven't forgotten. Should be 5 or 6, yeah.
Up to 5.
Oh, 5. Okay. So let's start from here. So I would request you, before we can begin, please be able to participate, just as I told you yesterday in class. Participate, yeah, just participate. Very, very important that you participate and take part in doing this, so that we move fast. Just as I said, I'm not here to tell the answers to people, but we are here to discuss. And let's move on. Question number 5, that's where we're starting from again. The question reads, an organization restores its petty cash balance to 250 at the end of each month. During October, the total expenditure in the petty cash book was calculated as being 210. And the interest was restored by 210. The analysis columns posted to the nominal ledger totaled only up to 200 kwacha. So the question is, which of the following error would cause? Which one of the following would this error cause? That's the question. So we are trying to study the significance of these errors, or what the error will cause. What was your finding out? Anybody? Hello. Hello.
Yes, sir.
Hello. Hello.
What was your finding out? Oh, okay. So what is there is that every transaction, okay, of the business affects the trial balance. That is very important to notice and learn, because all the records that we have that involve the cash of the business, the movement of the resources of the business, should be reflected in the trial balance. So that is the starting point. And then from there, I can ask the question again. What did you find out?
Hello.
Yes, sir.
Yes, for me, it was the trial balance being $10 higher on the credit side. That's what I wrote. That's
okay.
B.
So he wrote B. All right. Any other? Do you have anyone who wrote a different answer? Okay, there is silence in the land. Mr. Shtoka, defend your answer. Why did you choose B?
The reason why I chose B is because it's showing on the credit side that they were supposed to send 210, like giving out, but they only gave out 200. So there is that, I don't know if it's an undercast of $10 or what I can call it.
Okay. All right. So maybe just trying to explain the question a bit again. So there is that money that you keep as a business for small things, okay? Like buying a pen, buying those small things. When you record that money that we are going to be, in this case, these guys are saying we are going to be using a 250 kwacha, okay? For this particular, for these small transactions. Then what has happened is that these guys, the total expenditure, okay, the actual amount that they have spent is 200 and what? Is 210. That's the actual amount that they have spent. Okay, that's the actual amount that has gone out. Then what you see is that let's start from 210 to 10. Okay, this is your trial balance. It has debit on the left, the credit. So now, instead of recording the 210, you find that it is like it has just totaled to only 200 kwacha. The expenditure is this one. Like this is the total expenditure, but the amount that you have posted to the ledger, that's to the debit side, is what? Is only a 200 kwacha instead of 210. So you will find that there is a what? There is a shortage here, okay? The debit side is lower than what? Than 10%. The debit side is lower than 10%. That is to say, for the trial balance to balance, you know that the debit side and the credit side should be the same, which means that if this is lower than by 10, then this one is automatically higher than by what? By 10. This is not kwacha. Okay, dollars, yeah. These are actually dollars. So the answer is B. And note that someone had said, some people had said that no, the petty cash balance is what? At question number D last time, the petty cash balance being 10 lower than it should be. Then they gave the, what's that? The submission that this transaction does not affect the trial balance. No, every transaction of the business, it affects the trial balance. That's what you have to know ultimately, is that the trial balance will be affected. We can move. Anyone to authorize a movement to the next question?
Can proceed, sir.
Okay. Progress. We are progressing to question number, what's our question number? Question number 6. Question number 6. How does it read? What does it read? Okay. Anyone to read the question? Rachel, can you read the question for us?
Okay. A part to the debit of the sales retains account, but has been correctly entered in the supplier's account. Which of the following statements about the trial balance would be correct?
Okay. So, which of the Madam Mulenga, we ask that you switch off the mic. You turn off the mic. Yeah, thank you very much. Okay. So what is the solution? Question number 6. You have heard there is a purchase return of what? 48. Okay, you have returned the goods that are worth 48, but this has wrongly been what? Recorded on the debit side of the sales account. Now, but again, you have made this mistake as a business, you have recorded like that, but the supplier has managed to record the correct entries for this. So the question is that which of the following statements about the trial balance would be correct? Anybody?
I try.
Yes, sir.
Okay, so since we are like going to correct this mistake which was done, so it will be corrected with the A96, because one entry will be to cancel that entry in the sales. Then the other entry of 48 will be now the correct entry, which will be entered not in the sales returns, but in the purchases. So the answer will be D.
Okay. Is that clear with everyone? I have no other explanation. Is that clear? You know how you cancel the errors, right? Yes, just from those basics of, okay. The basics of accounting errors. Question number 7, a receivables ledger control account below contains the several incorrect entries. Now listen attentively to this one. A receivables what? Ledger control account contains several incorrect entries. In short, there are incorrect entries in this what? In this ledger. So the ledger control account. What is the other name for receivables ledger control account? Maybe I should start asking like that. Very important. Just to remind someone. What is the other name? What is the other name for this account, friends?
Sales account.
Okay, sales account. What about others? It's important to know the other names for these same things, because you can find another name in an exam. Then you start wondering that what is this thing? You start regarding this as a very new thing, but it's just basically the same thing. What is the other name for the receivables control account?
Debtors control account.
It is called the total debtors control account, okay, or receivables what? Control account. Sales ledger control account. So now, there are some of these wrong what entries that are here, okay? The entries are incorrect in this account. So what you need to do is that you have to correct the errors and define the closing balance. I said that, or I'm going to say if I haven't said. We are saying that the receivables control account has got credit side, just like any other account, and the debit side. Then what happens with the receivables control account? Where does the opening balance fall for the receivables control account? Is it on the debit side or credit side first? Don't worry, I'll talk about the control accounts again. Should be this next meeting of ours. But as from today, just get it an idea. Opening balance. Where does it fall for the receivables control account? Is it on the credit or debit side? Hello.
Credit side.
Credit side. What about others? Okay, so with the receivables control account, the opening balance, or that you usually call the balance brought down, is on the debit side. So you have 138. We are trying to correct the errors. 400, isn't it? Then you check if you have got the credit the credit sales. The credit sales are as well. They are added to the opening balance, meaning they fall on the same side. They are on the debit side. So we have the credit sales of 80. The credit sales of how much is this? 80,606 what? 60. Then when it comes to what is it? When it comes to these other entries, now we start looking at them. What do they do to the total debt that these guys owe us? Remember, this is the total amount that these guys owe us, our debtors, okay? Our debtors owe us this much, 138,400 plus 80,660. That's the total much that those guys owe us. So the question of the day is, you're going to read these other transactions and check what is the impact of those transactions to the what? To the debt. Okay. If they reduce the debt, you record them on the other side. That is on the credit side. They'll have the credit entry. If they increase the debt, that's the simplest explanation I think I can give. You have to record them on the debit side again to show that the debt is increasing. So the debt is on the what? On the debit side. On the debit side, those are debtors. Yeah, they are owing us. Assets, you record, they have got that debit entry, and debtors assets. Okay, so let's go to the the contrast. The contrast against a credit balance in payables ledger of 1,000. Where does this one go? What's the impact of this? In short, does that reduce the balance? That is the much that they owe us, our debtors, or it increases the amount that our debtors owe us? I'm talking about the settling of accounts, like you exchange, then there is that remaining balance, okay? You supply things on credit to your friends, and again, they buy things to you on credit. Then you settle the accounts off, right? Then there is that remainder that remains. There is that remainder that remains, okay? So that you need to pay. So the question is that if these guys pay us a 1,000, the question is, does that reduce the balance or it increases the balance?
It reduces.
It reduces the balance, so you record the contrast on the what? On the other side. So you have 1,000. Then you go to the irrecoverable debt written off. Okay, these are bad debts. Irrecoverable debts are bad debts. So what happens when you write the bad debts off? Does the amount that those guys owe us reduce or increase? Anybody? We can do this, I think. It will reduce. So the bad debts will be recorded on the what? On the credit side, or irrecoverable what? Irrecoverable debts, you record them on the other side so that this amount can reduce when you balance of that the account. So you have 4,950. Then you go to the dishonored checks from the credit customers. What happens to the dishonored checks? Okay, those guys pay. Okay, they pay, but that amount has not been honored. So the question of the day: what is the impact of that that transaction to the debt? A dishonored check, does that reduce the balance or increase the balance, or it leaves it the same? Or what is the correct entry? Is it on the debit or on the credit?
On the credit side.
The dishonored check goes on the credit side. A check has, remember these guys have been trying to pay, okay? They have been trying to pay. They want to pay us. But their check has bounced, meaning the amount has what? Hasn't reduced, isn't it? Right? Has the amount reduced? Yes. So therefore, it means that a dishonored check does not what? It does not decrease the amount. Therefore, a dishonored check should be on the other side. And how much is this? It should be 850. All right. Then let's balance off the accounts. Let's try to balance off the accounts. We see recovery date. Recovery date. How much is this side? Like 138,400 plus 80,660 plus 8. What do we get? Hello?
219, 910.
It's 219.
910.
Yes, 219.19.
219.10, like this.
219.910.
Oh, like 910, like this.
Yes, yes.
Yes,
Oh.
sir.
Okay. Then we record 219, 910. And what is the closing balance?
It's 260. So we subtract from 216, 820.
It should be how much?
Uh, 3,090.
3,090.
Yes. If we get the 216, 820, the closing balance.
What's the difference of these two? What is the difference? Like when you add this, then you subtract from that. What do you get? You get a 3,000.
Okay. So it's 213, 960.
213.96. Just a minute. Let me confirm something. Just a minute. Right. Okay. Where is it? Where is the financial documents? On question number which one? Oh, on question number 7, right?
Yes.
Okay. We didn't record the cash received from the customers, did we? We didn't. This cash that was received from the customers, we didn't consider it. So sorry. So the opening balance was 138. Sorry. Opening balance was 138,400. Then we had the credit sales on the debit side. That is the 80,600 and what? And 60. Then there was also what? A dishonored check. A dishonored check of 850. Then on the credit side now, on the credit side, we had this contract of 1,000 plus the bad debt, was a recovery debt of 490 or 4,950. Plus there is this part, cash received from credit customers, like the customers have paid. Yeah. When the customers pay back, it means that is reducing the what? The balance. So there is this cash from the customers, which is worth 78,420. We can balance off the account now. I think we should be able to balance it off. This side we are which one is the higher side? What are we finding? Is it still to what? 219? What did you find?
219, 910.
219, 910.
910, yes.
219, 910. Then yes. Can you close up the account now? You get the balance carried down. So this is 78,420 plus 4,950 plus 1,000.
$135,540.
Okay, so the balance brought down, the closing balance should be 135, 500 and what? And 40, which means B is supposed to be the what? B is supposed to be the correct answer. I don't know, do we have any other submission very different from this one?
So what about the decimal closing balance they've given us? The 129, we just need to ignore them.
Like this, these entries have errors, okay? So what we are trying to do, we are correcting the errors.
Okay.
Okay. Any other question? We can move?
Yes, sir.
Oh, all right. Let me just erase this and move to the next question. It should be number 8. This one. This one. Hilda Piri, could you read this question for us?
Okay, so question 8, a limited liability company's trial balance does not balance. The totals are $384,030, $398,580. A suspense account is opened for difference. Which of the following pairs of errors could clear the balance on the suspense account when corrected?
Okay, thank you. So which of these errors, first, which of these errors? Which of these errors, friends? Hello. Okay. Let's start with number 1. Let's see number 1. The debit side. Yes, sir.
They're saying we are we are trying to solve.
Question number 8.
Yes.
Is that an answer? Are you having a solution or? Okay. All right. So what is there? Let's start with the first option. The debit side of the cash. Remember, these are the balances that you get, okay? You have debit and you also have what? You have the credit side. So they are saying that the debit side of the cash is undercast by 10 what? 10,000. 60,160 paid for rent, correctly entered in the what? Cash book, but entered in the rental account as that. So these are errors now. What type of an error is this one? Where you, just for this one, where you are supposed to write this amount, then you decided not to decide. You end up writing something else. There is an error here for the rental one. What above an error is this one?
Error of omission, sir.
Error of omission. Interesting. What about others?
It's where you exchange the numbers. You make a mistake at this point. The word has gone, sir. You exchange and add this whatever chizungu mweo.
Okay.
Pressure is real, sir. Yeah, how sure.
Okay, interesting. Do you refer to transposition error? Or you mean, while looking for transposition?
Yes, I think so. Oh, I think that's the one I was looking for. But that's not near to the answer. Mm.
Okay, interesting. What about others? Yeah, I don't just want to go direct to tell you the answer. I want us to discuss so that we can maybe remind each other of other things that we have already learned. That's why I'm trying to.
Principle.
Error of principle. Okay, interesting. What about others? All right, we need to go through the errors, okay? Very, very important. What about the error of original entry? Who could define it for us? What does the error of original entry mean? Or what does it state? Okay, let me start from the error of transposition. We said that is when the numbers swap, okay? The characters in the number swap. You have this swap in the character of the number. So we have 60160, and this is 1610. This is transposition. Like, can this be transposition error? Have these numbers swapped when you look at them? Or they haven't even swapped. The numbers have not been transposed. Then if the numbers have not been moved, that is not a transposition error. Have these numbers been transposed?
No.
If they haven't, then it is not a transposition error. Okay, I said who could define for us the error of original entry?
No, they have not been transposed.
What does the error of original entry state? That's what I'm trying to find out from the class.
Okay, an error of original entry occurs when an incorrect figure is posted to the right account.
Okay. So you've seen, the incorrect figure is posted to the what? To the right account. The incorrect figure is posted to the right account. Could this be the error of original entry? Is my question.
Yes. An error of original entry, yes.
Okay. It is well. It is well. Friends, let's be going through these things. That's very important. You see, the questions that you're going to write, like they're interconnected. Yeah, let's be going through these things. It is extremely important. I'm not here to rush to give out answers or say whatever. I want us to revise, to remind each other since we are studying together now. So now we need the difference between these. You know how to open those. Simple Juno, you create it, but I'm not going to open that Juno. Just find the difference between these two. What is the difference? We have 0 here. What's that? 5, 11. 11 minus 6 is what? That's 11 minus 6.
That's 5.
That's 5. Okay, so 4550. 4550. Okay, this is the amount that we are considering now after we have corrected the error, which is the balance brought down closing amount. So we are saying that now the cash book has been under what? Undercast. Meaning, what does it mean to be undercast? Anyone? We need to participate.
It's less.
It has been paid less.
Yes,
underpaid.
10,000.
It has been underpaid. So the debit side can be what? You add the what? A 10 what? A 10,000, right? You're correcting the error. Like you're trying to correct the error now. Then what about, okay, this other difference, like when you correct this other error, you also add it, right? That's still on the debit. Forward 4550. What does this give you when you add, when you sum this side?
It's give you 398,580.
398,5 what? 580. So it does what?
Balance.
It balances, right? So the question, could this have been the error? Obvious, isn't it? Hello?
Yeah, it's obvious. So when you look at B, they've got the same, they've just swapped the figures. Then they are saying it's a...
B is an overcast.
Okay, yeah, so it's over.
This one is an overcast, so which means it has been overpaid. That will not balance, isn't it?
No.
Yeah. All right, we can move to which one? Switch now. Question number 9. Alpha buys goods from Beta at 30 June 2015. Beta's account in Alpha's records showed the 5,700 owing to Beta. So Beta submitted a statement to Alpha as at the same date showing a balance due of just 5,200 kwacha. Which one of the following which one of the following could account fully for the difference? Yeah. Which one of these? Do we understand the question? First, the question says like this guy, these are people, like Alpha buys some goods from this Beta friend, okay? And then at 30 June 2015, let's say this is 2015, Beta's account in Alpha's records showed only a 5,700 owing. That's what it showed to Beta, that this person is owing that much. Now, Beta submitted a statement to Alpha as at the same date, okay, as at 30 June. This one submits the statement, okay? And it is just showing the balance due of 5,200 kwacha. Which of the following could fully account for the difference? I think I've gotten the question.
Yeah, I'll go for A.
For A, Alpha has sent a check to Beta for 500, which has not yet been received by Beta. Okay. What about others?
B.
So, sorry, the one who found the answer just subtracted the $5,700 with the 5,200.
Yes.
Kindly explain. You shouldn't just say the answer.
Yeah, let me explain. So
sure.
This is it's a month in, right? So it's like they were sending the statement and looking at it was stated. So Alpha, since he has already paid Beta all what is owing, which is his book was showing 5,700, but Alpha had only the record of 5,200 at the month end. So that simply says that there is a check which is not received, or it's at a bank but it's not cashed. So you simply have to find the difference there, and you go on those answers. Then The nearest that I see is A.
Okay, interesting. What about
And what about
others?
D? What about D? Okay, if you look at D, it says Alpha buy goods from Beta. At 30 June, Beta's account in Alpha's record showed 5,700 owing to Beta. Beta submitted a statement to Alpha as at the same date showing a balance due of 5,000. So looking at this, Beta has issued a credit note because he received a statement showing 5,200. So me, I was thinking Beta has issued a credit note for 500 to Alpha, which Alpha has not yet received.
Okay. Interesting.
I don't know.
Interesting. All right. Maybe just to help the class, would you explain what is meant by credit note? Would you help me to explain what it means? Yeah, so that once people get what a credit note means, maybe they'll quickly get it. Yeah. What does a credit note mean?
Credit note is like you're returning back the money. You are overpriced and you retain the money.
Okay.
Also be returning goods.
Okay.
These are goods or money.
Goods or money.
500 were retained.
Okay. So in short, this person has what he has returned. These are goods. Okay. Like for us, for this one, these are goods. It's not really man. Like you've seen, we are dealing with the goods. So it's more like this person has what he has. It's a purchases return. It's more like it's a purchases return. You buy the goods, then you have returned some goods. Okay, some goods that are worth 500 kwacha. So what you just record is you record that I just owe this person 5,200 kwacha, isn't it? Then you also issue a credit note to mean that no, I have sent back the goods that are worth 500 kwacha, so that when you add that, it gives you 5,700 kwacha. Did you get that?
Sorry,
Yes.
come again.
Yes. So what has happened is that this person has paid, has recorded that he just owes this person only 5,200 because he believes that he has sent back, okay, some goods that are worth 500 kwacha. Once you do a purchases return, you issue a credit note. Of course, you issue a credit note that I've sent back the goods. So he is no longer owing, in short, he's no longer owing that 500 kwacha. Did you get that?
Yes, sir. Thank you.
Yes,
Oh,
sir.
okay.
Thank you.
Question number 10. Yeah, it's
So what
good
is
now.
the answer there, sir? Number 9.
It is number D.
Okay.
Beta has issued a credit note that this person might not have yet received, okay? Because before you receive the credit note, you might not see, okay, that what is going on is this. You need a note first to know that some goods have been rejected this side. Okay.
Sorry, sir, just there. So when we see any question that is talking about a credit note, we think of a reduction, is it? It's a
purchases return. It's more like a purchases return. You have purchased some goods, then you return the goods. Okay. Usually
right.
Purchases. Yeah, you have gotten it. Question number 10. It's good that now people are participating and we are moving together. You are learning. I'm happy. When you are participating, that's when I know that you are learning.
Before you go to question number 10.
Yes,
so
sir.
if If the answer A was that Alpha has sent a check to the bank account of Beta, of which Beta has not yet received. Could it be an answer?
Okay, there is a question to the class. Could that be an answer? That Alpha has sent this Alpha who is owing the goods, right? Has sent a check to the what? To the bank.
The bank.
Yes, to the bank, and this check has not yet just been received. That has not yet been received by Beta. Beta hasn't yet received the check. Could that be the answer?
No, that could be the answer. Because the
No,
check
it can't be the answer. Because to be over by 500, to be over 5,700 plus that other 500, I think. If that's the case. So it can't be the answer.
Mr. Francis, you wanted to say something?
Yes, it can be the answer because there's no way he can just deposit the check directly without getting the details from the other party, because they have to be aware also.
Okay. When he,
hello, sir.
Yes, sir.
It can't be the answer because according to the explanation, if he did not receive, it can't have less than what is in Alpha's records. Anyway, that's what I think.
Okay. What about others?
Hello.
Yes, sir.
Yes. Similarly to what the previous speakers said, because Alpha sent a check which Beta has not yet received, so he wouldn't even have recorded it in the books because he hasn't received it yet. So he can't record that 5,200 if he has not yet seen the check.
Okay. Is the questionnaire fine now? The questionnaire should be fine.
Yeah, it's fine.
Yeah, okay, thank you. Yeah, so check who is recording, okay? Who is actually recording? Oh, number 10. Quickly, let's move to question number 10. Who is Madam Mainza? Would you read for us so question number 10?
Right, sir. So question 10. At 30th June 2014, a company's allowance was receivable. At 30th June 2014, a company's allowance for receivables was $39,000 US. Then at 30th of June 2015, trade receivables totaled $517,000 US. It was decided to write off debts totaling to $37,000 US. The allowance for receivables was to be adjusted to the equivalent of 5% of the trade receivables. So what figure should appear in the statement of profit or loss for these items?
Okay. People can now pull ideas. Let's bring it now to the table. What do you think could be the correct figure And you also give the reason as to why you think so.
Hello?
Yes, sir.
Yes, I want just to try. So, first of all, we need to calculate the 5% trade receivable allowance. So
okay,
multiply. Hello.
We are moving with you. So once you speak, we'll calculate for you here. So 0.05, okay, that's 5% of what? Of trade receivables, 517,000. Okay. Yeah. Then what is the answer? What do we find from here? Anyone to do it on a calculator quickly?
$25,850.
25,850. All right.
Okay. So now this answer must be subtracted by, because we are writing off from the $39,000, we are just writing off 37. So that means there is a 2,000 remaining, which must be subtracted from the 25,850. Then that's the final answer.
And what is the final answer?
That's D, 23,850.
Okay, so minus the 2,000 in these differences. So what do we get once we remove 2,000?
23,850.
23,850. Okay, yeah. Interesting. It could be the answer, but let's hear others.
That's what I was thinking also. That could be the answer. I think the way you explained, that's what I was doing.
That's what you were doing. Okay. What about others?
Maybe before we proceed, I wanted to know where you're getting the 2,000 from. I think I'm a bit behind there.
Okay, so the
2,000 is coming from 39,000 minus 37.
Yes, because we had the total allowance receivable, which we were expecting, which was 39,000. Then we actually wrote off 37,000, which we were not going to receive. That means we were assured to say we were going to receive the 2,000. Then that's the one we subtract from the trade receivables, which are happening on the 30th June.
Okay, that's clear. Yes. Thank you.
Okay. Interesting. Mine submission as well. Let me submit as well. I also submit that whatever we are saying is correct. But let me also submit mine. So you said what is the 5% of this, right? What is the 5% of this?
25,850.
800 and what? And 50. So this is the accumulated this is the total allowance for receivable. Like this is the total allowance for receivable. Okay. After you have closed as of this date. Remember, this is the allowance for receivable from this is this is the allowance this is the allowance receivable from which period? First of all, which period do we get this allowance for receivable? This one. Is it the period in the remember, this is I want you to pay attention to the dates. The dates should matter to you. This is 2014. This is 2015. Okay. This is 2015. So this is the other year, like more like the opening one. So as you open in your trial balance, remember you have what you find as the opening balance, accumulated depreciation, accumulated allowance for receivables, which is also called the accumulated provision for doubtful debt, right? In other words, you come with it from the previous period. So it is there. This is the one that you have 39,000. This one occurred from the previous period, okay, in 2014. Then now in the new period, remember we are asking of the statement in the profit and loss account. The profit and loss account just deals with the present what? The present period, not the previous one. We are just interested in what has occurred during the period under concern, the new period. So this is the allowance for receivable that we have now, like in the new period. So what you do, you need to find the difference. Okay, just the way how you calculate from the profit and loss account, the way how I showed you how to handle depreciation, what is account allowance for receivables in the profit and loss account. Before you know what amount to record, what did we say? You should subtract this, or you compare this amount with this one in the trial balance. Check that this one is in the trial balance, isn't it? This is the allowance for receivables that you have found in the trial balance. This is the one that you have just calculated in the new period, right? So comparing these two, when you have to find the difference, like this one you have as at now minus this, what do you get when you say 25,850 minus 39 what? 1,000, you get negative what? It should be a negative balance, which is a reduction basically in the, what do you get?
Negative 13,150.
Negative 13,900 and what? And 50. This shows
150.
Or 150. All right. This means that the allowance for receivable did what? Reduced, isn't it? I explained this under profit and loss accounts. I said once you have a negative here, this means that what? The allowance for receivables reduced. If you have a positive balance, it means that the allowance for receivables increased, meaning your doubt, like or the provision for doubtful debt increased. And once you have a positive here, you record under expenses. I think that's what I said, like it becomes an expense. But if it reduces, that becomes the other income. You add it in the gross account, in the gross profit, in the trading account, sorry, in the trading account. But are you following the explanation that I gave? I'm just trying to remind you what we said under profit and loss account.
Yes, sir.
Okay. So you have this negative what? This is now the decrease in what? The bad debt, okay? Or that's the decrease in allowance for receivables. So this amount that you have now, this is your new allowance for what? This is your allowance for receivables. You add it with what? With the bad debt themselves, because you are checking what should appear in the profit and loss account. Remember, in the profit and loss account, you record what? Expenses, isn't it? You record the allowance for receivables, you record these expenses. So once you record these expenses, you record these expenses, the allowance for receivables plus the bad debt. So which means we should add what? We should add the bad debt written off. That should be 37,000. What do we get? What do we get as the difference? To add this means just subtract, like this amount minus this, it's still the same thing.
It's 23,850.
You've seen that the answer becomes the same, isn't it? Hello? Have you observed that the answer is the answer is still D. But on the explanation, I wasn't clear. So this is the explanation that I give, trying to remind you what I talked about under profit and loss account, because this is what we said under profit and loss account, how to treat the allowance for receivables. I remember explaining this. Somebody asked me even questions around that. So that's how you treat this, just to remind you. So this, if it's a negative, you know that it's a reduction in the what? Allowance for receivables, which is a good thing. But if you find a positive, that's an increase in the what? In the allowance for what? For receivables. And you just record the change. That's what I said. In the profit and loss account, you just record the change in the allowance for receivables. Is it an increase or a decrease? If it's a decrease, it has a negative sign, so meaning it's a reduction. There's a reduction in terms of expenses. Is that clear?
It's very clear, sir.
Oh, okay. Yeah. Okay, that's just my submission. We move to question number 11. And what should be the time? Question number 11.
Number 11, which one of the following journal entries is required to record goods taken from inventory by the owner of a business?
Okay. Anyone?
C.
Why do you say so, sir? You can explain the answer. Why do you choose C?
On my side, it's A.
Okay, you can begin. Why do you say A?
Okay, so since the owner is getting goods from the business, so that means it's drawings. So in the purchases is like purchasing. So the purchases will be giving, then the drawings will be like receiving.
Okay, interesting. What about others? Are we all buying the same?
Drawings are debited, then inventories are credited.
Okay, inventories are credited. Interesting. Any other submission? Okay. Let me not start asking questions like what is the journal entry? What's the difference between inventory and purchases? Maybe I should start asking like that. Any difference?
I think there's no difference because when you purchase, that is the inventory.
Okay.
Because you purchase to resell.
Okay.
There is a difference there.
Yes.
So inventory.
Oh, okay. Sorry. Go ahead. Sorry.
Inventory
you can
is
continue.
a stock. Inventory is a stock
Inventory
that you have.
Which is not readily available for sale. Yeah, like stock that you have, but it's not like ready.
The inventory is stock.
like stock that you have, but it's different from that stock which is really available for sale, from my understanding.
So, sorry, sir, come again. I didn't get.
Okay, let me think again.
So inventory is treated as cash.
Okay.
Where purchases, those are the goods that you buy. So inventory, it's a good that you have for sale. So you treat them as cash.
Hello?
Hello?
Yes, sir. You can proceed.
Yes. So to me, I was thinking option B would be the best because you are going to treat the inventory as on a debit side as sales, then on a credit side as drawing, where the owner is drawing the goods.
Okay. Interesting. All right. What about others?
An inventory is the cost of goods available.
The cost of goods available. What about a purchase? I'm asking for the difference between a purchase and an inventory.
Okay, yes. Hello, sir.
Yes, sir.
Okay, I still think the difference is inventory is stock that you have, but it's not, it's like reserved stock, for example, not the one which you have really for sale. That is what is known as a purchase. The one not is that is really available for sale. That has been solved, is it?
Sorry, come.
Okay. Okay, I don't know how to explain it, but let's find a way of explaining it.
Purchases are goods meant for sale.
Yes.
Yeah, I want to try because the reason why I chose the A is because when you're making a purchase, that same cost that is attached to the same purchase you are making to purchase inventory, that's the purchase. So the moment you take something from that same inventory, you're actually purchasing. That's why I chose A. When you're making a purchase, you're purchasing inventory. I don't know if I'm making sense.
Can I come again on the
Yes, sir. You can come again.
I think, yeah, maybe I might be wrong again. But, okay, from my understanding, purchases will comprise of the entire goods that you buy for resale. But when it comes to inventory, it will be okay, let me use the word stock. That stock that you have, but it's not ready like on a display for sale, like reserved stock. I think that's what I remember from the last teaching. Thank you.
Hello?
Yes, sir.
Hello.
Okay. I've heard all the submissions. Let me give mine as well. My submission is that the answer is A. Now, let me show you what I have read so far. You know, I'm not claiming that I know it all. I'm still bound to learn. But what I've read so far, I've read that the only difference between inventory and the purchases is just the time. Otherwise, there is the same goods that you are buying for resale can be the inventories. And that's why you cannot, have you ever seen in the journal? First, maybe you should understand what we record in the journal. In the journal, the entries that we make in the journal entries. Have you ever seen the inventories in the journal accounts?
I've only seen where you make like a purchases account. I don't know, when you deal with the inventory, you actually record the purchases because it's like a cost or something.
Oh, okay. So basically, what is happening is that when you draw things out of the business, you debit the drawings account. Okay, the drawings account is debited, then you will credit the purchases account. As simple as that. In the journal, that is in the journal. Those are the journal entries that you make. Hope that is clear. That's my submission. Like, that's mine now. Yeah, that's how I am submitting.
The answer is A.
Clear? Yeah,
That's
submit right. That the answer is A.
Yes.
That's my submission. Okay. Oh, what's going to be there?
Hello?
Okay.
Hello, sir.
Yes, sir.
I just want to find out on the same. What if by mistake?
Yes.
Sir. What if by mistake you forget to write the drawings in case you're not given the answers like this? Now you're writing a journal, a T account for the same transaction. What if you don't put the drawings? You put maybe the name of the owner of the business, just like it is, then you debit him like he's receiving, then the purchases you like credit. Is that okay, or you just have to remember the drawings?
No, you have to write the drawings because it's different when you write the name of the person now. Because the name of the person is a different account. That's a personal account, and the drawings account is a different account. You get the names of people, those are different accounts. And actually these classes, they exist in different classes of accounts, right? We have what we call the real accounts, the nominal accounts, you know, those things. Yeah, so yeah, you've gotten it. Okay. Mm-hmm. All right. Let me ask you that we skip question number 12 and 13. I'll still come back. I'll still come back to it. Yeah, I'll still have to come back to question number 12 and 13. Everyone is aware of that, so I'll ask about that. So you remind me. Let's do question number 14. Time has really moved fast, eh?
At 1st January 2015, a company had an allowance for receivables of $18,000. At 31st December 2015, the company's trade receivables were at $458,000.
So what was the answer for number 10? Hello, sir. Yes, sir.
It was D.
The answer was D, sir. Okay, are you fine now? So that we move. Has the questionnaire gotten our reply? Hello?
I think you're breaking at one time, so maybe, yeah, trying to call his name, I don't know.
No, I didn't get the name, I just got the voice. Because here I can't see the people behind the document.
Oh, okay. So question 14, at 1st January 2015, a company had an allowance for receivables of $18,000. At 31st December 2015, the company's trade receivables were $458,000. Therefore, it was decided that A, to write off debts totaling to $28,000 as irrecoverable. B, to adjust the allowance for receivables to the equivalent of 5% of the remaining receivables. What figure should appear in the company's statement of profit or loss for the total of debts written off as incoverable and the movement in the allowance for receivables for the year ended 31st December 2015?
Okay, solutions. What are our submissions?
Hello?
Yes, sir.
Yes, I don't know the answers here, but I can try to we walk through together. I don't know if that's okay.
Okay.
Yes, I haven't calculated the answer, but I think this is it's almost the same as the one I explained, but I would want to explain it the way you did it.
Okay, you can explain, sir.
Okay, so the 18,000 there on top is coming from the previous year, isn't it?
Yes,
Yes,
sir.
so we'll leave it for now. So we'll just multiply 0.05 to 458,000.
Okay.
It's giving us 22,900. Then we'll subtract the 18,000 from this same amount we've gotten right now, because these were the allowance receivables from the previous year. We'll subtract.
Okay, what do we get?
$4,900.
4,900.
Yes.
Yes. So since we have a positive number, which means it's increasing, which becomes like an expense in the trading profit and loss account. It's an expense. So this amount
Hello.
Hello.
Yes,
Hello?
sir.
Yes. So this amount, we have to add it to the point which is given in A, with the total debt totaling to 28,000.
What do we get?
It will give us 32,900. That's what I think is the answer.
Okay, I've gotten the submission, but my question with you or to you is that what do you understand by remaining receivables? Because it is not just saying the receivables, it says the remaining receivables. Do we treat the remaining receivables as same as that? or the same or different?
On that one, I don't know. I just thought it's the same.
Okay,
The
okay,
remaining
interesting.
receivables. Yes.
Okay, interesting.
These receivables, hello, these receivables are showing the date of on the 31st. That means they are the same will start within the next year.
Okay. So now check. From the receivables that we have written out the bad what? The bad debts, isn't it? We have written out the bad debt. Now, once you write off the recovery debt, meaning the total debt, this one, it reduces, right? The total number of amount that you are receiving, we are expecting from the debtors reduces, isn't it? It reduces by 28,000, right? What do you get? What is the remaining receivables? What is the remaining receivables?
That is about 430,000.
430,000. These are remaining receivables. Then you can continue now, multiplying 0.05 of this. What do you get? That is do the 5% of these are remaining receivable. Now, the 5% of remaining receivables is what?
21,500.
21,000. 21,500. 21,500 minus this 18,000 from the previous period. What do we get?
3,500.
3,500 plus the bad debt. What do you remain with?
21,500.
31,500.
31,500.
Yes, sir.
Did you get that?
Yes.
No, okay.
That's the answer?
Yes, sir. That's my submission.
Okay, I have a question there. I thought
yes,
we
sir.
already removed the bad debts, the 28,000. Already
okay.
that
Now,
amount we were calculating.
Oh, okay. Remember, check it. When we removed the bad debt was just being removed from the what? From the receivables, so that we can have what we call the remaining receivables. It was just helping us to see the remaining receivables. But still, even if you have removed it, when you go in the profit and loss account, check what we are writing. We are recording this in the profit and loss account. You know that what you record in the profit and loss account is the bad debt plus what? Plus the allowance for receivables, isn't it? But the key word here was the remaining receivables, like it is not any other receivable. There is a difference. I don't know if you got that.
Sorry, sir.
Yes,
what did you say the answer is?
It is B. Yes, madam. That's my submission.
Sir,
no.
What about 12 and 13? I didn't get anything. I don't know. Maybe I lost network.
Oh no, we skipped to 12. We skipped to 12, 13. We said we'd come back. We didn't record. We are on question number 14. We
Was
have
it
not
a typo there? On number 14, sorry, sir, I know you're explaining on the questions that we haven't done yet. But on number 14, was it a typo? Because you had said that we should multiply 0.05 times the difference which was found, which was 430,000.
Mm-hmm.
Then
What
it gave
does it
us
give
a
us?
21,500.
Yes. Minus
Which
this.
minus the bad debt. Is it, what did you call it?
No,
Yeah.
minus
The
this accumulated the allowance for receivables.
Oh, accumulate. So that when that is done, it gives us a 3,500.
Yes, this is 3,500.
Then we add it to what?
To the bad debt now. Okay, in the bad like the bad debt are recorded in the profit and loss account. You record the bad debt and the allowance for receivables together in the profit and loss account.
I get it. Thank you. All right.
Okay. Are we all fine now with this one?
Yes, sir.
Okay. If we are fine, then we can move on. You have to knock off so that you can go for work. That is very important. Question number 15. Question number 15. We are ending soon. Those who are tired, please, can you just be strong a bit? Question number 15. Madam Lenga.
Huh?
Would you help us reading question number 15?
Okay. Question 15. A business received a delivery of goods on 29th June 2016, which was included in inventory at 30 June 2016. The invoice for the goods was recorded in July 2016. What effect will this have on their business?
Okay.
One, okay. You can go ahead, sir.
You can continue reading.
Okay, one, it says profit for the year ended 30 June 2016 will be overstated. 2 says inventory at 30 June 2016 will be understated. 3, it says profit for the year ending 30 June 2017 will be overstated. And then 4, inventory at 30 June 2016 will be overstated.
Okay, so what is the answer? Anyone? What is the answer? Hello. Hello.
Hello.
Yes, sir.
Yes. I think the part where it says profit for the year ending 30th June 2017.
2016. 17.
Yeah, it will be part of the answer.
What has profits done?
It will be overstated. This is because
Hello?
Yes, sir. Yes, madam, sorry.
We lost him. He hasn't finished explaining. I think I support him.
Yes,
it's
madam,
supposed
you can
to
proceed.
be number 1 and 4, where it's
Number
saying profit for the year ended 30th June 2016 will be overstated. And inventory at 30th June 2016 will be overstated. Reasons being, we've been told that this company received business of delivery of goods on the 29th of June.
Yes.
Yes. Then
I support.
Then it was also included in the inventory on June. So it's like a repetition. So it was to show an overstatement. I don't know how best to explain it, but I think that's my submission, sir.
Okay. Somebody wanted to speak. Is it Mr. Shakasunga?
Shakasungu. I support the madam. Yeah, because when you add the goods at the end of the month, the profit will be shown as if you have made so much profit. So even the inventory will also show that you have got it will be overstated. So the answer should be D, 1 and 4.
Okay. All right. I also submit, let me also give my own submission quickly. So I also submit that the answer is D. That's my submission. Yeah, that one is mine. Is that clear?
Noted, sir. Thank you.
Okay. Question number 16. Analysts, read for us question number 16, if you are in the class. Oh, she's not around.
Can I read?
Yes, you can read.
I read?
You can read.
Question 16 says, which of the following errors would cause a trial balance not to balance? An error in the additional in the cash book, failure to record a transaction at all, cost of motor vehicle debited to motor expenses account, the cash entry was correctly made, goods taken by the proprietor of a business recorded by debiting purchasing and crediting drawings account.
Okay. So what is the answer? Anybody?
Hello, sir.
Yes, sir.
Okay, looking at them all, the first one will only show a one-sided record, but the second, the third, the fourth, they're showing both sides being recorded. So meaning, I think an error in the addition and the cash book will not have the trial balance to balance. It won't balance.
Okay, so you are saying the answer is A?
Yes, sir.
Okay, what about others?
Mine is 1 and 2.
Me, when I say a question like this, where they say, oh, 4 items, that's what I chose.
Okay.
No, explain to us, madam. Guess work here. Explain, madam.
It's guesswork. I just looked, I said, this one, the all 4 items. Because no question has all this. So it's the only question with all 4 items.
Okay, interesting. Any other answer?
For me, I think it's 1 and 2.
Why do you say so?
Okay, yeah. An error in the addition in the cash book will definitely not balance in the cash book.
Okay.
Then 2, failure to record the transaction. When that transaction has been omitted to be recorded, I think, yeah, the trial balance won't balance. Yeah.
On my side, I pick C.
Okay. Why do you pick C, sir?
Yeah, so I'll start with point number 4. though it's difficult to explain point number 2 or point number 3. Point number 4 is saying it has to do with the purchases. The purchases are being debited and crediting the drawings account. Like from the previous, these are being put in wrong sides of the trial balance. So they'll definitely cause the trial balance not to balance. Then also point number 3, where there is an error which needs to be corrected. I think I submit.
Okay, interesting.
Are these all types of errors or part of these same answers?
Okay. Okay, let me quickly submit. Yeah, I'm sorry. Let me just quickly submit. There are about some other types of errors that have been redefined here. These are some of these are definitions of some errors. Okay. And these errors that are defined here are the errors that do not affect the trial balance. The presentation of the 7 different types of errors that don't make the trial balance or that don't affect the trial balance, which means it balances, it still balances even if those errors are there. That's what we said. And one of them is what we call the failure to record a transaction at all. What type of an error is this one? Maybe just to remind ourselves again. Is the error of omission. We said that for the error of omission, the trial balance will still balance no matter what, because you have not recorded this transaction either on the debit or on the credit. So it still balances, it doesn't affect that. Where is the next one? The cost of motor vehicle debited to the motor expenses account. Then the cash entry is correctly made. So the question of the day is, what error is this one? Where you record on the different side, like different classes, different classes.
Error of commission.
Right?
Error of commission.
Okay. Error of commission. The goods taken by the proprietor of the business recorded by debiting purchases and crediting drawings account. What type of an error is this one?
Error of commission.
Okay, so what is there? What you need to understand is just that you have observed you might not have done errors in lecture. It has been shown that the errors are very important. I'm sure you have seen errors. Errors are very important. Find time to go through the errors. I submit that the answer is A. That's my submission. The only error that will cause a trial balance not to balance, that means it will affect. The only error here that can affect the trial balance is number A. Is number 1, like the error in the addition in the cash book. You know that when you make an error in the cash book, you know that whatever you record in the cash book goes where? Goes through the trial balance as cash, right? Those are assets. You know those things.
Yes,
those are assets. Okay. Any other question? Any question? Oh.
No, the explanation is clear, sir. We just need to do more, to push and push until the end. We'll continue fighting.
Okay.